Hello everyone, this is Paul from the APN Academy, and in today's video we're going to be looking at candlesticks. Now we're continuing with the beginners series. So this is the 13th video. We're so far done 12 videos. For those who didn't know about Forex, this is the 13th, and we are in the previous one we talked about how you can mark your support and resistance levels, and then today we're looking at how we can bring in candlesticks so that we can start taking trades, right? Now, what are we going to be talking about in this video? We're going to be talking about what a candlestick is. We're going to be looking at candlesticks and timeframes, how they go hand in hand, descriptions of a candle. In simple terms, how can one read a candlestick? Then also we're going to be looking at candlesticks, some of the candlestick patterns, not all of them, some of which can give you the options to buy and options to sell. Not all of them. There are very many candles, but we're just going to look at some that I think are very important in my perspective. Are we together? So without wasting time, let's just go straight into the video. But before I go there, if it is your first time coming across our channel, please do not forget to hit that subscribe button and turn on the notification bell, because we release such videos every week. And if you've been watching our videos, hit that likes button so that many people come across it, right? So let's start with what a candlestick is. Now, this is just a representation of price. Remember, whatever we're dealing with is price. You cannot buy something that is not represented by price, or you cannot sell something that has no price, right? So a candlestick to a trader represents price. So that's why I'm saying here that it's a representation of price that displays highs, lows, open and closing of prices of any security. It can be a currency pair, it can be a commodity, it can be a cryptocurrency. That's what most people call digital currency, right? For a specific period, meaning that a candlestick is representing a price in a specific period. It can be for a day, it can be for 1 minute, it can be for 5 minutes, it can be representing a price for a day, it can be representing how a price performed for a week. So in simple terms, a candlestick just represents price. Now, we shall go a bit into detail about it. Now, we're going to go to the candlestick chart later on in the practical bit of it, and you'll clearly see that we have combinations of such things. They appear like this, right? Now, the color, someone is going to ask, what about the color? Why are you using blue and red? Now, the color does not matter. According to me, I like using blue to represent buys, and I like using red to represent sells. But that doesn't matter. You can choose any color of your choice. You can choose white to represent buy or white to represent sell. You can choose black to represent buy or sell. It's up to you. But you just have to understand that what color you're using to represent your buy movements, what color you're using to represent your sell movements. Are we together? So let's just break down the candlestick a bit. Now, this blue, according to me, represents that the price was moving up. Now, when price is moving up, remember we're saying we are going upwards. Now, this will be the open, meaning the price started from here, where you see this body of the candlestick. This whole thing that is solid is what we call a body. I've just marked it here. We call it a body. Now, the price opened from here. By opening, we mean that, well, let's say the day closes at midnight or closes at 3 a.m., depending on the time of wherever you are. If a new candlestick starts, a new day starts, this is where the price opens from. And in most cases, if let's say this is the previous candle, let's say the yesterday's candle, let's say it was a candle going up, the next candle should start at the price that the candle, this previous candle of yesterday closed at, right? So if we are going up, I'm assuming these are candles going up, it means that if the candle opened from here, this is the body showing you that this is a price. This is how price moved that day and closed here, right? We expect the next candle to also start exactly at what we're labeling as close. Are we together? Now, we also have other parts that we have marked. We have mentioned that this is the body, and then this is where the price opened from. Now, when the price opens, it's not just going to start buying. It may first, sellers may try to push it down. Now, when sellers try to push it down, sometimes, not all the time, sometimes sellers will try to push it down and to create, the price will move and reach a certain point, right? And then it will reject and then starts buying. Are we together? What does this mean? This means that price made a certain low. It reached a certain low, a certain price a certain mark, which is a price that we're marking as the low of that day. I'm assuming that you're in a daily chart. Remember, we have said that the candlestick represents price either in a day, weekly, or a minute, in a given period of time, whether in H1 or H4. We're going to look at that on the candlestick, on the practical bit on the MetaTrader. Now, also when the day is ending, the price closes at a certain mark, right? And this is what we're calling the close. But also before the price closes, buyers may have tried to push the price a little bit higher, and then sellers rejected it and then closed here. Are we together? This is what we are calling the high of that time period. It can be H1, it can be H4, it can be daily. I hope I make sense. If I'm fast for you, you can just slow down the video so that you can pick this properly, or you can just watch it 2 to 3 times so that you understand it. Are we together? So for the sell, it is just opposite. Like I mentioned earlier, I prefer using red to symbolize a sell in my perspective, but you can choose any color. So sell is just the opposite. Now remember, sell, we said that we expect price to be moving down. Now when price is moving down, it means that the open is going to be up. For the sell, the open is up. For the buy, the open is down. That's one of the differences. Then the close of a buy is up. The close of the sell is down because we are moving down, right? Now, price opened from here, but buyers try to push the price up. Not all the always, because we're going to look, there are certain candles that do not have these wicks. These things that you're seeing like tails up and down, right? You are going to realize that on the charts, not every candle has them. Now, sometimes you may just see a sell candle like this. Let me just shade it to represent sell. You will see a sell candle like this, but without this tail up here. You can call it a tail, you can call it a wick, you can call it a rejection. You can call it a shadow. Those are all names that represent these things here, these things that are like lines. So the buyers might have tried to push the price up, but failed. Then the price continued going down. This is the body. And then the price closed here. But before it closing, buyers tried to push back the price up, and then it closed at this price. But meaning it made a certain low of a price. So this is what we are calling a low. This is what we are calling a high. This is how a candle is represented. Are we together? A normal candle. There are many types of candles, which we are going to look at some of them, and I'll explain them to you, right? So that you understand. Now let's continue. Candles and time frames. Now we have major time frames that we use. There are very many time frames from monthly up to minute one. Some of the platforms even go up to seconds. But the major time frames that I would encourage you to interact with are MN, representing monthly. We have W1. This is MN is monthly. W1 is weekly. D1 is daily. H4. The H hourly time frames can be H4, H1. These are the common ones. But also we have H12. We have H8. We have H3. We have H2. But these are the common ones, which I advise you use. Then minutes, we have very many minutes. We have minute 8, minute 30, minute 45. There are very many. But the common ones are minute 30, minute 15, minute 5, minute 1. They're the common ones, right? Which I encourage you guys to interact with. Now, why are we mentioning this section particularly? I want to bring to your attention, or for you to understand that if you're in monthly time frame, it means that each candle that you're seeing in monthly represents 1 month. For example, this is August. If you're in August or you're in September, whatever month you're in, when you go to monthly, you will see that it is 1 candle representing that whole month. If that particular month you're in ends, the new month starts, you'll clearly see a new candle starting to form. If you're in weekly, it means that each candle that you're in, each week you're in, that candle, it's represented by 1 candle. If you're in daily, it means that each day is represented by a candle, like that, even hours, even minutes, right? When the minute ends, you'll see a new candle. When the hour ends, you'll see a new candle. When the H4 ends, you'll see a new candle. H4 means that after every 4 hours, a new candle is opening. Daily means that after every day, a new candle is opening. Weekly means that after every week, a new candle is opening, right? That's the relationship between the candlesticks and the time frames. That's why we're saying that each candlestick in a given time frame represents that given time frame. For example, if in H1, each candle represents that 1 hour. Are we together? I hope I do make sense. Now let's proceed. So let's look at some of the descriptions of the candles. We have already looked at the first ones. There are very, very many others, but we're just going to go through a few of them so that you understand. Are we together? Now, the most common types are these ones. These are the normal candlesticks that we have looked at, where the body is big enough. This is the body, this solid part. These rejections, or what we call tails, they represent high and lows of the prices, right? The body starts from here and ends here. Remember, my red represents sell, but you can choose any color. My blue represents buy. You can choose any color. Now, let's look at these other types of candles. Remember, we've said there are very many types of candles, but we're going to talk about the major ones and what they symbolize. Now, you'll see certain times a candle which is like this, with a tail or a rejection or a shadow that is bigger than the body. This means that, for example, the candle opened, the price opened from here. Sellers tried to come into the market, right? But buyers pushed the price higher, right? Pushed the price higher, even passed and then closed here. Are you seeing it? This simply means that buyers are overpowering sellers. But it's not always the case that whenever you see such a candle, you should start looking for buys. No, this is just a communication. Candles are just simply communicating to traders. Most traders tend to take them as final decisions to take trades. No, I do not encourage that. You have to look at the behavior. Where are you? In the previous video, we talked about drawing support and resistance. So before you start bringing in a candlestick formation, look at, am I at a resistance or support before you start looking for buys. This candle can form in the middle of a movement. You're still going down and forms a rejection like this, and you buy, yet you're buying in between and you're still going down, right? Then this is just the opposite. This means that the market opened from here, buyers tried to take over the market, but sellers rejected. That's why we call this a rejection, this tail here. Sellers rejected and then closed here. So it sometimes will have a small tail up, or sometimes it may not have. Are we together? This is the interpretation of this. Then sometimes you're going to find certain candles like this, right? Or sometimes even it will just be like a cross. Now, this means that there is an indecision in the market. Sometimes you're going to see it like this, that these are called dodges, right? This one is called a hammer, this one is called a shooting star, right? But the names do not matter. Just I want you to understand the interpretation of them. When you see a longer wick, for example, this rejection is from down upwards, it means that buyers rejected sellers. When you see the tail from up to down, it means sellers rejected the buyers. It means that sellers are stronger. Here it means buyers are stronger. That's how you interpret them. Now, when you see a full body like this, it means that that candle, if the body is full, it means that, for example, this is sellers, it means that sellers are a bit strong in the market. Now, when we come to these dodges here, I've showed you the other types. You can find sometimes just like a cross when the body is simply small. Sometimes you can find it like this. Sometimes you can find it like this when the bodies are really so tiny. Remember, we have said the bodies are those colored parts, right? Now, let's look at the interpretation. The interpretation means that there's a fight between buyers and sellers. That's why you're seeing there's a long tail down, a long tail up, and a small body. Are you getting it? Long tail up, long tail down, and a small body. The body is just down. Now, this is showing indecision. So in most cases, do not make decisions or do not conclude basing on such candles. Rather, you should wait for the next candle. Either the next candle is a bullish one or a bearish one. But like I've emphasized, always know where you are. Where am I in the market? Am I at a support? Which phase am I in? We spoke about phases in one of the videos, right? So what phase are you in? What level are you at? Are you at support or resistance? Are we together? Those are all things you need to consider. So this is how you can describe candles or how you can read candles, right? There are very many certain shapes that we're going to see on the chart, but this is just how you can understand them, seeing the tails and then the body descriptions. Are we together? So let's continue. Let's look at the common candlestick patterns that are available. Now, most people tend to confuse the definition of a candlestick and the definition of a candlestick pattern. A pattern means that it's there's more than one. That's why you're defining it as a combination of candles. And then these are simply communicating to us which people have the most presence in the market at a particular time. Are we together? And this is where we normally create, or we come up with a decision, we come up with a conclusion when we want to take our trades. Are we together? So now, one thing that you need to put into perspective is that I'm assuming you've watched the previous video. In case you've not watched it, go and watch it. I'm assuming that now you know how to draw your support and resistance. Let's say I do have a market that is trending down as lower low, lower high, lower low, and the market has retraced until this area here. So how are we going to use these candlestick patterns? First and foremost, watch how the market is approaching here. We want to see how the market is approaching. What are you going to look at to determine how it's approaching? We need it to lose momentum. One, how do we know that it's losing momentum? The sizes of the candles, the bodies of the candles start shrinking. They start becoming smaller. Are we together? That shows that buyers are losing, because we know that after a lower low is made lower high, lower low, when we retest this previous lower low, we say that we expect the market to continue down. But if there is a strong power, the candles are increasing in size, it shows that these buyers have strength in the market. So it means that you'll not be interested in this point, or rather you'll be interested in this point here, the lower high. Are we together? Remember, I told you in the previous videos of marking lower highs and lower lows that as long as the lower high is not taken, you're still in a bearish market. Unless this lower high is taken, that's when you can say we're starting a bullish market. So these are the most important points where we're looking for these candlestick formations, but focus so much on the sizes of the bodies. How is the candlestick approaching here? Are we together? We have a video on that. Make sure you watch it. The shrinking candles. Make sure you look for that video and watch it. I'm just giving you briefly. Then also, it's just the opposite for the buy movement. The market is making higher highs, higher lows, higher highs, higher lows, higher highs. We expect when the market breaks a previous higher high on the retracement, we expect these are the areas we're interested in. We expect this retest and we can look for buys. When we break also here, when the market is coming down, we want it to come back as this approaching here, want it to be with a weak momentum. We look for these candlestick patterns here and then to go up. Now, let's look at these candlestick patterns that I've just put here. Now, I want you to look at these candlestick patterns here. This first one that I've circled here, you can see that these are the bodies are full. This is a buy candle according to my colors, my color of blue, then my color of red. But I want you to look at something here. The red candle is overpowering the buy one. The buy one stops here and the sell one continues. This means that the sellers are covering the buyers, meaning that they are stronger. It means that it's covering. This covering here in English called engulfing. That's why we call it a bearish engulfing. Now, look, why are we calling it bearish engulfing? Because the sell candle, the bear candle, sell, bear are the same thing. Shorting, sell, and bear are the same thing. So bearish candle is on your right-hand side. It means this is a bearish candle. The bear is covering the bull. So this one indicates to sell. Then here you can see that the sell candle is being overpowered by the buy candle. It means that the buyers are covering up the sellers. The bulls, bull, longing, and buying are the same thing. So the bullish candle is covering up the sell candle. This means that it's communicating or signaling to us to buy. So the logic on candlesticks, or to understand which one is more powerful, is which one is on the right. Which one is on the right? If the buy candle on the right is overpowering the one on your left, it means that that person, is it a sell candle or is it a buy candle? It's done overpowering. Are we together? The same applies here now. Look at this. We have this one is called a morning star. Why is it a morning star? Because it's normally formed at demand zones, down levels. Remember, the morning we're just starting the day, so meaning we're expecting to move higher. That's why the name came from. All these candlestick names were derived from Japan, a Japanese trader. So that's why their names are Japanese, sometimes Japanese words. Some of them have Japanese names like haramis and all that. But I just want you to understand the meaning behind how they appear. Do not focus on cramming the names. Focus on understanding what they symbolize. For example, here we have said you focus on what is on the right. Now here, the sell candle came first, and then the buy candles came in and equaled, matched this. So this, you will see that this is a full body candle, a smaller candle in the middle, then a full buy candle. So this is a morning star. Then we have the opposite of just this, which is called the evening star, which is this. You can clearly see we have the buy candle, then a smaller candle, then a sell candle. Are we together? This is an evening star. An evening star is usually found at resistance. This one is found at support. Now these ones here, this is a bearish engulfing. We want it to be seen at resistance. This one wanted to be seen at support. Are we together? And then this one here, we talked about them, the rejection candles or the done with longer tails. This one here, we find it at support. This one, we find it at resistance. The shooting one, and then the hammer, right? This one, we find it at support. This one at resistance. So at resistance, what we're looking for? We're looking for sells. At support, we're looking for buys. So the candlesticks that I'm writing on resistance are signaling to us that we're supposed to be looking for buys, while the ones we are signaling we're writing on support are signaling to us that we are looking for buys, because from support or the demand zone we're looking to take buys. Are we together? Now we also have other candles, other types of candlestick patterns, but we're going to stop on these few ones. Now the last one we're going to be looking at is what we call a tweezer. Now we have tweezer bottoms and tweezer tops. Now tweezers, they usually appear two candles like this, right? Of the same size or almost the same size. So if the buy candle comes first, and then the sell candle equals the same length of that candle, this means that this is a bear, because we're looking at the right. Which one is on the right? It's a sell candle. So this is a bearish tweezer, or what we call a tweezer top, because it normally happens at resistance. So we're calling it a tweezer top. It happens at the top, right? So tweezer top happens at a resistance and signals a sell. While we have the opposite, whereby this buy candle is on the right and the sell candle is on your left, signaling a tweezer bottom. It happens at support when you see it like that. So normally focus on the body size and the tail, or what we call a rejection. Which side is the rejection facing? If we're rejecting from down upwards, meaning the buyers are rejecting sellers. If we're rejecting from up to down, well, it means that the sellers are rejecting the buyers, like that, right? Also look at the body of the candle. We have very many other candlestick types, but these are the common ones that most traders do use, and I will encourage you to start looking out for them. Now let's just go and just implement some of the things that we have studied in the previous video and this one. Well, let's put into perspective the candles and how they come into play. Let's just go to the charts. Okay, so I'm on my chart here. We're going to be using XAU, USD. This is gold. You can just see it on the top left corner there. Now I'm in the daily chart. Now remember, we say this is the daily chart. It means that each candle that you're seeing here represents a day. For example, this day has just started. This is the new daily candle. This one here. This is the new daily candle. This is yesterday's candle. This is the other day's candle. Now, if you switch, the time frames are just here, above here, where I've circled on the top left corner. Now, if you shift, you can change between times because the time frames are of different uses. We're going to look at that in our last video, which is the next video. And in the next video, we're going to be talking about the importance of time frames and how we can take trades. So if I'm in monthly here, this represents months. Each candle here represents a month. If I go to daily, each candle represents a day. If I go to weekly, each candle represents a week. If I go to H1, each candle represents an hour. If I go to H4, remember we said H stands for hour, M stands for minutes. So if I go to H4, each candle represents 4 hours, meaning after every 4 hours, a new candle will be created. Now let's go to daily, and then we look at, let's implement what we studied in the last video and what we've just studied today, the types of candles. Now, remember we said that how do we draw support and resistance? In the previous video, we were looking at turning points, right? But I say that do not look at historical turning points. Just look at the immediate turning point. For example, we want to consider this move down. So when the market approached here, it broke which turning point? This turning point. So we're just going to mark it. I'm going to use a slab, or what we call a rectangle. So I'm just going to mark the market broke this area here. So I'm not going to look for historical points this side. I'm just going to look at the immediate one. Now I want to observe something. When the market broke this level here, we retested, and what did the market give us? The market gave us one of the candlestick types that we have just looked at, right? Let me just increase the size here. I want you to look at this. The market gave us one of the candlesticks we looked at, the bearish engulfing. Remember, I said on my chart, this green is a buy, the red one is a sell. So the buyers tried to come in here, this one here, but sellers overpowered. You can see this is a bearish engulfing. It means that we say that it means that sellers are into control. Then also we said we have rejecting candles, right? Now you can clearly see buyers tried to push this market up, but this tail means that sellers rejected the market down, right? And if you're to combine this, this gives you what we call an evening star, because it's happening at a resistance, right? Two small buy candles and a long sell candle that is covering it up. This makes an evening star that we just looked at, right? Then also we have this rejecting candle, which is a shooting star that we looked at. Buyers tried to push the market up, but sellers rejected and even turned red. So do not look at cramming the colors, or that's why I was saying colors are not so important, but look at the understanding the meaning of the candlestick, right? So let's continue, right? Let's continue. That's one. We have looked at the market broke this support level, right? Now let's also look at the market when it was retesting this area here, because we had the market making lower low, lower high, lower low, this retest here. So on the retest here, still the market gave us a bearish engulfing. Are you seeing this? A buy candle and then a long sell candle. This means that sellers are into the market. So you keep marking the turning points like that, like how we discussed in the previous video. So also this is a turning point because the market is creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So also here we do have a market that broke this level here. On testing, what did it give us? It gave us a bearish engulfing. So it means that sellers are still in the control of the market. That's why the market kept going down, right? Now, I would just like to emphasize something. As a new trader, please do not want to trade in between here. Always want to trade at the levels that you've marked. For example, we marked that the market has broken this support. Wait for the market to come back inside here. Do not trade in between in this space here where there's nothing. For example, if I mark this level of support that was broken, let me just mark it here. If let's say this is the level of support that I want us to mark, this one here, right? This. I'll just delete this other one so it will remain with one for better understanding. If this is the level of support that I want us to focus on, you've drawn, the market broke this level and came down. Now, most people want to trade in between here. Please do not trade. Wait for the market to come back here. Or if you want to, if you're a reversal trader, trade from down here so that you're targeting up here. When it reaches there, you exit because the higher chance that the market is going to continue down, like how it did, because the market is clearly making lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So the higher chance that the market is most likely going to come back down. So this is the most important area that we're looking at, what we call area of value or area of interest. And it's in these areas that we're looking for the candlesticks, the candlestick patterns that we have spoken about. Please do not look at the candlestick alone. Look at how is the candlestick approaching. For example, the candlestick was making bigger steps, higher high, higher low, higher high. Look at the higher high distances. Then it started reducing. This is what we talked about in the slides, that look at how the candle approaches. For example, here, when the candle was approaching this previous low, the candles became smaller, and then it gave you a tweezer top. I see. We had a tweezer top here. This is a tweezer top because the candles are almost of the same size, communicating to you that, hey, sellers are coming to the market. Are we together? So make sure you're taking trades at these important levels. Do not take trades in between here, so that it will avoid you from panicking, making irrational decisions, closing small profits, closing losses because you're not sure you've traded in between. You start fearing or panicking. That's where all the issues arise from. Greed, emotions kick in from there, all because you're taking trades at unimportant places. Make sure you're taking trades at important places. Mark those lows and highs correctly. We have videos on all that, right? So this is what I wanted to take you guys through as beginners on how you can use candles, how you can describe them. Do not focus on the names. There are very many materials out there. Do not focus on the names. Focus on the description. Focus on what the price is communicating you and how is price represented by using the candlesticks. Of course, we also have the line chart and the bar chart. The bar chart is almost similar to the candle, but the only difference is that the candles have a body, the bar charts have no body. They just have the highs and lows, but they have no body, but they're almost similar. Are we together? So if this video made sense to you, make sure you click that likes button so that many people also come across it. And if it was your first time watching any of our videos, make sure you click the subscribe button. We produce such videos every day to help you in your trading journey. Have a great time.